We've talked a lot about the factors that are causing oil to go down, Brian, over many shows. But I want to talk about the implications. What does this mean? Because it looks like we're going to be stuck with this for a good long while. Obviously, there's a jobs implication. We've begun to see that with so many layoffs. I think the number is estimated 250,000 oil workers laid off last year. Are we going to see more of that? Is that just the beginning?
Well, first of all, we're going to see more of low oil prices for a while, because if you talk about why it's happening, there's 1,000 different factors, but the basic factor is supply and demand. We've been producing more oil than there is demand for. That hasn't changed yet, so
that's also why it impacts our economy more and the consumer more here.
Conventional wisdom is lower oil prices, lower gasoline prices boost the economy. We're not seeing that. We're not seeing it as fast as everyone anticipated. And eventually things will change. Eventually, things will turn around. But right now, people are buying more SUVs. Consumption will go up. But I think the short-term pain in the oil industry, which has grown hugely in the United States, is overwhelming the gains that you see over time from lower oil prices and lower gasoline prices.
Are we going to see even some of the giants kind of permanently shrink to this? I mean, we've seen, Royal Dutch Shell, it said that it's taking a real hit to its earnings, to the whole fourth quarter.
Oh yeah, all the big oil companies have been going through a series of, denial and retrenchment and denial. I think that they're all kind of, this is going to go a little longer than maybe they realize. Now, most of these companies have been through these cycles before, so they kind of know how this goes. But yeah, I do think Shell is making a huge deal and probably made it at a really bad time and paid a higher price than they should have. So they're going to undergo some, especially bad pain, I think.
Beth, there's also some just kind of local economy implications here. We wrote a great story, Jen Rengel did it, about what happened in Williston, North Dakota when there was the boom, the shale, the fracking boom, minting millionaires literally every day. Real estate was huge. Unemployment was way down. I think it was 1%. Are we looking at basically a reversal of Williston, but any place like it here in the U.S.?
Definitely. I think this is a local economy story in a lot of cases. We're going to see workers who have been really profiting from high oil prices. That could really turn around some towns, and I do think that that's a big risk going forward.
And Brian, also just pulling back globally, oil-producing countries like Venezuela, Brazil, Russia, the Middle East. I mean, this is going to really impact them long term, and also might spark geopolitical instability. I mean, this could be big. I mean, the implications aren't just it is big,
huge.
Right?
Yeah, I mean, the Russian economy is heavily skewed to oil and gas. The Middle East, obviously, Saudi Arabia, has decided not to cut their production, which has helped drive the price down. Now Iran is going to be coming into the market. They want to grab back that market share that they've lost under the embargo. That's going to put more downward pressure, and it could definitely, be a destabilizing force politically in a lot of places.